Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado today. Pleased to be joined by one of Schwab's regional investment strategists, Rachel Deshelle. Good morning, Rachel. It's great to see you. How are things?
Good morning. It's great to see you as well. Things are great here in sunny Greenville, South Carolina. So equally as a beautiful day as you have out there in Colorado.
Sounds like it. And interestingly enough, passing through the weekend into another week here. Of course, we have a short week this week. We do have a holiday in the middle of the things on Thursday for Juneteenth as a brief reminder. But looks like we're getting started with a little bit of enthusiasm heading into the week, everybody. So we are going to talk about a little bit of that, of course, and hit up the major charts as we do. Take a minute and say hi to our friend Michael Fairborn there in the chat. He's going to keep an eye on things for us. You can follow Mike and me on X. Mike is there is Mike at Mike Fairborn CS. I am at Kevin Horner CS there. Both of us trying to provide some tweets throughout the week for you. I like to post some individual charts looking at patterns and that kind of thing. And I know Mike is big on the same, but also some data coming through on Mike's individual X posts. So another good follow there on X if you're not already doing so, everybody. Let's quickly get to our disclosures and then we'll get into what you're all here for. Of course, the discussion on the market, on the charts, etc. So first, remember that our conversation here is fully informational and educational. We do not make recommendations. We do not endorse a specific approach or method to trading the market here. We will talk technical analysis in this class, of course, and in so doing, we want to remind you that technical analysis is merely a piece of the decision-making puzzle. We discourage you from basing decisions exclusively on the technicals, but we do think that it is an important area for you to incorporate into your decision-making. So please keep that in mind when you are placing your trades. And further, here's our agenda, everybody. We will start with that top-down approach. So we're going to look at the S&P 500. We're going to look at the NASDAQ 100. We're going to look at the Russell 2000 and perhaps the semiconductors as well. And beyond that, sectors in the news today, stocks in the news, etc. So we're going to try to get to as much as we can over the remaining 40 minutes here this morning. Let's start, Rachel, as we do with the S&P 500. Was that a brief pullback? I mean, is that the extent of our pullback, Rachel? My goodness, 2 days? Not much longer, huh?
No, it looks like that's all it was in the short term. So we had a little bit of a dip, a little bit of a reaction there on Friday, but it seems to be a bounce right above that 20-day simple moving average that really acted as that near-term support. And even those prior highs from mid-May as well. But it looks like momentum is still refusing to reach those overbought levels. So it may suggest price kind of hovers around here, at least for the short term. So that's what I'm seeing. What are you seeing, Kevin?
Yeah, a lot of the same, to be honest. But do we look, I mean, obviously price remaining relatively high. Yes, we have brought the 20-day moving average up along the way. I guess if you're simply looking for reasons to be a seller up here, we maybe haven't received any yet. Now, what I mean by that is many traders are going to lean into the idea, Rachel, of selling into weakness. But when you look at what we've had since the original gap, I'm going to take us back to when things started to dramatically improve. It was on this April 23rd gap and recovery of the 20-day moving average. We have not had a close below the 20 days since. So I think for a lot of traders, that becomes a pretty good short-term indication of the trend, meaning simply without a close below it, nothing is different since April 23rd, Rachel.
Exactly. Nothing has changed. We're still on an uptrend. And I know traders are riding that trend. We're making higher highs and higher lows, and nothing has changed since then. So to your point, that 20-period moving average, that short-term support is going to act as a level that folks may be watching here in the near term.
And I'm just showing the brief and limited, but still uptrend in the RSI. So while we are getting drawdowns, very brief drawdowns to the 20-day moving average, you're not seeing any indication that the that the selling is taking over the buying, even in the midst of the pullbacks. And what that's telling us, I think, is that the pullbacks are apt to remain, at least in the interim here, everybody, apt to remain shallow in depth, take you to the 20-day moving average until something changes to that extent. There's not a lot different that many traders are going to do here. They're just going to kind of try as best as they can, sit on those hands and allow the market to continue to drift up if that's in fact what's going to happen here, what it wants to do. So the only other thing to peek in on here, Rachel, might be the intraday period on the SPX, just to see how those pivot points might be incorporated. You've got the gap high, and yeah, we have possibly looking at the high from mid-morning on Friday, from which we kind of rolled over and had that weak finish based on these geopolitical tensions. But honestly, if you move through there, I mean, what's the thought process beyond that? I mean, that's going to be a bullish maneuver should it play out that way.
Exactly. I mean, the fact that we had a hard push past that first resistance level, we may see price try to touch that next R2 level or second resistance level around that 6050 level or 6050 level. So that could be what we'd be seeing. But I mean, the first barrier that we need to get through first is obviously those midday highs of Friday, which we're kind of approaching right now as that nearer term support. But if we can break through, traders are going to look at that R2 level.
Yep, I think I agree with that pretty well also, Rachel. So for now, a little bit more of the same. Let me see here. I was noting that Trade and Grow is calling out the last high, gave us a lower high in the RSI, which is entirely true, even though we made a new high intraday in price up here. It's a good reminder, but let me just point out, we got the pullback we may have expected based on that divergence. We pulled back to the 20-day approximately with the test with Friday's lows. It's unclear at this point, too early to know, of course, but that could easily be playing out that weakness, that bearish divergence. That could already have played out. Let's see what happens if we do, in fact, move to a new high in price. Does the RSI carry, make a new short-term high? Maybe it gets into overbought conditions then. Always a little tricky in the moment and live, I would suggest, to kind of validate divergences, Rachel. It's one of those things that requires maybe a slower look at things. It's difficult to do it in the first 5 minutes of a trading day, that's for sure. Okay, how about what's happening with the NASDAQ 100, everybody? We got a very similar move with the weakness on Friday. I'm going to drill into basically the last peak to trough, back to where we are. Looks very similar to the SPX here, Rachel, with a pullback to the 20-day with the lows we got on Friday. Again, a nice little bit of a gap higher this morning on the open.
Yeah, it looks a lot the same as what we just saw on the other chart. I mean, we had that, what one of our viewers called out, we have that slight bearish divergence, which we saw kind of led to a little bit of that pullback on Friday that we saw. But then we used that 20-day moving average as that retest of support, and it didn't even quite reach that level either because there's been so much strength here and hasn't been a real change of the trend. So that momentum still remains in the upper bounds of that range. I mean, even the upper fourth of that range within the RSI, it looks like too. So the strength is still here until the trend tells us otherwise.
Yeah, and I know it's hard as a trader to look at the price action and say, well, it isn't different, but it is a little different, meaning we've managed to kind of go sideways in here. We've not continued to be seeing those aggressive moves to the upside, the big range days. And so as we drift around a little bit, bulls are less eager, a little less enthused, but the trend remains. And again, I think that's why you find traders leaning into those moving averages so consistently. We're going to look for something different, right? We looked for something different way back when we broke the downtrend line. We finally had the indication of something different right there. And again, that's what we're seeing with the NASDAQ 100, holding the 20-day since April 23rd. And if you're looking for a reason to be a seller on something different, on some weakness in the NDX, it's likely to be a close below the 20-day moving average as the first potential signal for that. Haven't gotten there yet. And reminder, as I often like to say, Rachel, as the individual who encourages you to manage your emotions efficiently, I like to see traders do that through some semblance of piecing into their trades, piecing out of those trades. That makes it really easy to manage the emotional tie you might have to the trade, or at least easier to manage that emotional tie. I think some traders would start to take a little bit off, not entirely positions, but you know what? That first close under 20-day, under 21,527 would be an opportunity to pat yourself on the back, take a little bit of profit. Even if you got yourself in way back here at the high of the day on day one, right now you would still be up nearly 15% on that move. So try and be thoughtful about your amount of profits, percentages of profits, and the amounts, Rachel, that you want to maintain, right? It's hard to do that if you're just watching these ticks, but if you start to set those levels for yourself so that you know how you want to act, chances are you're going to be more prepared in the moment. What else do we need to be thinking about here, Rachel?
I think, I mean, you said it all. There's going to be a lot of different things. I mean, position sizing is definitely one of them. So, like you said, if you can manage your emotions, stick to the plan, and maybe piece a little bit off once you see that confirmation, that's going to be everything as far as just taking your profits where you can and also managing your risk at the same time.
Like the sound of that. Like the sound of that. Okay, let's look at, we've got a nice move here off the NASDAQ, but let's look at what's going on with the Russell. Rachel, this has been very interesting of late. We've had a change to what's been happening with the Russell in the most recent couple of weeks here. I'm going to remove this oval I've drawn in. Talk to me about what you see on this chart going back really just the last week plus or so.
Yeah, so this one has been an interesting one to watch here because this one looks a little bit different than the rest. So we saw that breakout of that descending trend line that we saw there. We also saw the breakout of that head and shoulders bottoming pattern, or that inverse head and shoulders that took place there. That's kind of marked by those little gray zones. So we saw a breakout of both of those pivotal points, the neckline and the trend line. But after that breakout of that initial neckline resistance, now new support, price has came back and retested that level, which occurs at the exact same level as that 200, or is that the 200 or the 20 period simple moving average? That's the 20 period simple moving average.
The 20 that we just bounced off on Friday, right? Or we basically closed on it on Friday.
Exactly. We closed right on it, which occurred right where that prior neckline of the pattern is. So again, this is kind of one of those times where traders, if you're wanting to wait for confirmation, you wait for that close below or even a couple closes below that shorter term. But in the near term, it looks like it's a sustained bounce support retest, at least for now.
It has the appearance of that. I think, again, traders are probably looking to see, do we get a closing low? I think that's fair to suggest. Look, we've made higher lows along the way. You called out everything that I've drawn into this chart. So for many traders, everybody, it could be as simple as we broke the neckline of that potential head and shoulder here. That was the green level. We broke it. We rallied into the 200-day. Then we got thrown back to the confluence of the neckline and the 20-day. Everything about that move is remaining to this point bullish in nature, in the sense that it follows a pattern that is consistent with a new uptrend developing here. So I think some traders are going to look at the importance of the low we made on Friday. And that number is 2,095, by the way, just under the 2,100 level that we've been talking about is very important. So a close below the 20-day would be different. I point that out because we had a move here that took us intraday below the 20-day moving average, but it closed above it. Really nice long tail that day, indicating the reversal of sentiment intraday. Same thing happened back here. This one was really close. Let's see, our close this day was 2,039.85, and I think our 20-day this day, and point right to it, was 2,037. So we closed 2 points above it after being below it all morning, or all day, really. So in fact, much like the S&P, Rachel, much like the NASDAQ, since April 23rd, no close below the 20-day moving average. You don't get them to all three line up like that too frequently, do we?
No, we don't. But one of these is not like the other because the other two are above their 200-day simple moving average. And this one had a little bit of a bounce from its 200-day moving average with a bearish engulfing candle last week. So it looks like price is just sticking between this level between the 20-day and the 200-day there in blue. So we'll just kind of have to see what happens next.
That's exactly it. Yeah, right on support. If nothing else, Rachel, again, traders probably have an idea of the important levels on the major three indices we've looked at here thus far, knowing how they want to act if things change, right? If things happen, we get that close below the 20-day, everybody's going to start paying closer attention, I hope. Everybody is prepared for a close below the 20-day so you know how you want to handle things. That's the key takeaway as we want to remind you. All right, let's look at our one group with some real nice relative outperformance this morning, Rachel. It's going to be the semiconductors. We are bouncing a little bit. Let me back off this chart and just highlight the fact that once more, very brief in terms of our short-term pullback here, huh?
Yeah, it looks like we've had, I mean, something similar than what we just saw in the S&P and the NASDAQ. We're still in a sustained uptrend. We're making higher highs, higher lows. We did have that little bit of a pullback like we saw in everything else on Friday, but we're a little bit more distance from the 20-day moving average. So we're a little bit more extended. So to your point, there has been a little bit more relative strength in this case. So I'd be kind of wondering what are some of those top names really leading the space of the semiconductors and what their charts look like as well.
Well, that's a good question, Rachel. Why don't we just do a little quick moment here of reviewing the space? Let's add a new watch list, and I'm going to make it linked up with my chart, and then I'm just going to change this to our by industry groups. And let's go into technology and specifically semiconductors and equipment. So this will give us the watch list of the entire space, everybody. Now, we're going to get some erroneous symbology in here. Unfortunately, will happen from time to time. But if I change, let me just do some customizing here, everybody. We'll get rid of bid and ask. And let's just put in percent change and make that our number one column here. I think I should be able to get some action out of this, and this will help us understand where we're getting some movement today. There we go. So we've got some names with which we probably have some familiarity, but some of these are going to be very limited. So let's look at a couple, though, Joe, just to give an idea. This Astera Labs is something that a lot of traders have been talking about. Rachel, when you just take a peek at the trend of what you're seeing here, just from a standpoint of an example discussion around a existing pattern, what are some of the details you're noting on this one?
So with this one, it looks like, I mean, obviously the first half of the year was an uptrend, and this for part of the year we saw a little bit of a downtrend, but price has been recovering in the short term, at least over the last like 2.5 months or so. And when that happens, it forms that bowl-shaped or like saucer, almost like basing type pattern, which is like that recovery as it builds back. And so right now, price is just in the middle of this consolidation as it's rebuilding back. And even just today, it has a power candle so far moving above its 20-period simple moving average, just within that range. So, I mean, Kevin, you drew those lines well. It looks like you're seeing the same thing I'm seeing. If we can just kind of break around that clean round number of 100, it looks like it could be off to the races with this one.
Interesting review there. I feel very similarly when I look at the pattern development here. One of the enjoyable aspects of technicals, of course, is to see patterns play out, and then your assessment of what is changing and what it might mean, and then you go forward a month, 2 months, 3 months, and you see it playing out that way. That's always exciting for a trader. I think a couple of the things that stand out, you called them out here. You basically got that bottoming pattern that resembles kind of that head and shoulder view, right? Inverted left shoulder, right shoulder over here, vicinity wise, your head right here. And then of course the white line I drew in the neckline. Now, if we look at what's just gone on right in here, everybody, shockingly, this is about a 12-point range of consolidation for the last month plus here now. And that gives us something to work with, right, everybody? If we're talking about a potential for a breakout, many traders will look at the possibility of a close through 100, bringing the opportunity for another 12-point move to the upside, just simply based on the value or the height of the range from which we would break, assuming you broke to the upside. For many traders, the trade is not to take right now. It's to wait for the breakout and play for the possibility of a $10 to $12 move to the upside. Now, we know that when we start doing these measured move calculations, they are never guaranteed. It's just a process that traders are trying to use to gauge and estimate where they could be looking to sell. Now, interesting enough, Rachel, when I look up here, I'm going to also call out the gap level. And the gap levels we know are so important. Look at that price. How convenient. Right around 112. How about that? I mean, when the math works out and then the historical price works out as well in the chart, those are the things that many traders are looking for. Confluence of data, right?
Confluence of data. No guarantees, but confluence of data. It's definitely, certainly something that traders will tend to watch and certainly enjoy seeing.
That's right. Now, one more on this list that's caught my eye is AMD. And the reason is that if we draw this chart back a little bit, Rachel, you're going to notice that there are some lines that are suddenly being broken that have not been broken very recently. So we go all the way back 2 years to our prior high here, our all-time high in AMD back in March of 24. We have been on a pretty healthy downtrend, but things are changing, Rachel. We have been watching the 20-day moving average provide resistance. Oh, we scooted through it and got to the 50-day. We still made a lower low thereafter. But something different is happening on this chart right now.
Something different indeed. It looks similar to the bottoming pattern or reversal pattern that we just saw, where it's almost looking to me like a complex head and shoulders type pattern where we're seeing the sustained downtrend, but then yet the reversal at the same time. And something notable that I saw, even with that breakout of that neckline, which is that first kind of white horizontal line across there, price reached or momentum reached overbought levels, which is really showing the strength of that trend in such a short sustained period. So the fact that it reached those overbought levels and is reversing over many of these pivotal points, especially just bouncing between the 200 and the 20-day simple moving averages, it's things like that where you look at this collection of data points where you say, hey, price may be doing something a little bit different here, and this is something that can kind of draw my attention. And I know traders will be looking at this retest of support here if this bullish pattern in price action plays out.
Yeah, it's a very different chart than it has been for about the last 18 months or so, right? It's finally showing signs of life. It doesn't mean that we're not going to get rejected at the 200-day again like we did just late last week, but a break of the 200 would be significant. A couple of the things that some traders are also going to note on this chart, the movement in the RSI is giving you bullish behavior as well. What do I mean by that? Well, reminder of what the RSI can tell us in new trends. When we start to trend, we can see that pullbacks in the RSI reach oversold conditions between high 40s and low 50s, meaning we pull back to about the 50 level, and then we get bounces in price action. More commonly, when we utilize the RSI in a range-bound scenario, we think of overbought as above the 70 line, oversold below the 30 line, but as a validation of the recent trend and the series of higher lows we've made so consistently in the last few months here now, many traders are going to look at that RSI and say that's validating the recent uptrend. Doesn't mean we have to break out from here or get through the 200-day, but I'll tell you, traders that are watching this, over the 200-day is going to change a bit of sentiment for the longer-term viewpoint. It's going to be the first time with any new uptrend that we've been in and above the 200-day since back in October of last year So it would be a significant development if it can absolutely happen here. So we'll have to see if that plays out. And then Carol is asking about what average volume might look like on AMD. Well, let's just remind you how to get that. I don't have it on my chart here, everyone, but let's show you briefly how to throw that up. The easiest thing is to go to your beaker or your flask, and we go into the studies here, and I'll just start typing with volume, and we'll see that average volume, it's actually volume average, volume AVG. I'll go ahead and add that by double clicking. The default is for the 50 period. So if you wanted anything other than 50, click the gear to change the length of your moving average, okay? But mine is going to be the 50 period, and it's going to show up down below. I could obviously put this in this. Let me change that. I'm sorry, everybody. I'm going to move that to the volume box so that it appears the same line. And then I'm also going to make that line, oh, well, I thought I had it. Oh, the volume average line. I need to make it a little thicker. There we go, 3. So this way, you see it here. So what are we looking for in volume? If you're bullish, just to give you an idea of what a bullish trader wants to see on AMD, everybody, is that a trade takes you through the 200-day, gives you a new short-term high somewhere in this area. And on that day, you get something like this, volume-wise, Rachel. If you get a bar like this on a breakout to new short-term highs, many traders, Rachel, would look at that as confirmatory in nature. So using something like the average volume in a period like this can be quite helpful.
Exactly. And traders use it vice versa too. So if we see a breakout but occurs on low volume, it could be a sense or kind of like a warning sign to an early breakout or a false breakout. So to your point, volume, we want to see it confirm the trend. That takes us all the way back to Dow theory, but these are some good tools that you can see on the chart. And if you are one of those that uses watch list too, volume average is another one of those that you could add to your watch list as well. So even in the semiconductors that we're looking through on that left-hand side there, we can add volume average as a filter. You can scan for it as well, so you can see it many different places.
It's a great reminder of the opportunity to use volume. Many of you have seen us provide scans when we look through the market. Many traders look to find volume above a certain level on an average basis, ensuring your ability to be in and out of your trade. Liquidity is so important, of course. So that's one thing for consideration. As it relates to your question, Adventure Golfer, here about OBV, on-balance volume can be incorporated as well. Reminder of what on-balance volume is as a third is another indicator we can add to the platform here for you. But on-balance volume just is a plus or minus of volume every day on your chart. So if you're looking at your chart from a 1-year basis, it's going to start calculating from 1 year ago in terms of the chart. And it's basically adding the volume on your up days, subtracting the volume on your down days. It's another one of those confirmatory signals that some traders might incorporate. So much like, Rachel, the RSI, on-balance volume is kind of one of those confirming signals. It can either be, you can either say, yeah, it's absolutely confirming the breakout in price, or it's not confirming the breakout in price, and therefore the trader might not feel as strong about a breakout, for example. Are there other thoughts that some traders incorporate as it relates to OBV?
Yeah, just like we look for divergences in like RSI and things like that, where we can connect the highs in price, the lows in price. Same with the indicator. Traders can use it in that way. But to your point, it's a cumulative tracking of volume throughout whatever time span that you're looking at. So, but divergences would be the other way to kind of look at it.
Yeah, you're right. Divergences and confirmatory signals similar to what we get from some of our other indicators as well. Another good reminder that if we pay too much attention, we can look at every single indicator. They all tell us something. We can also be paralyzed. So try not to go too far, everybody. Have some indicators that work well for your approach, your process. That can be one way to look at it. We should also, as we are thinking, obviously we talked just a few details as it relates to semiconductors here. Let's move off of semis and let's talk a little bit around some of the other groups that are moving in terms of sector action today. We're getting some leadership from tech. Can't say that's a surprise. We just got done looking at semiconductors and how aggressive they're moving today. So we're certainly going to see some leadership there, but financials moving strongly here. How about this chart, Rachel? Again, a bit of a departure from the trend. Now, we did close below the 20-day moving average on Friday. We could be looking at something a little bit different here.
Yeah, it does look a little bit different. So it looks different than a lot of the indexes that we just saw when we were charting. So we had a couple of closes below the 20-day simple moving average. So the next support would probably be close to even that 50-day simple moving average too, just below that line that you drew there in the short term. But that resistance is going to act as that 20-day. But you can see that 20 days even kind of arced down a little bit with the slope of it, saying that in the near term, we may see this little bit of a pullback, a little bit of a downdraft. So, but the longer term averages still remain in an uptrend. So this could be something short-lived.
Could be. Maybe the decision comes in based on how we act at the 20-day, right? I mean, you could be looking at a bounce that is nothing more than a rejection bounce as we move into the 20-day moving average. It's very early in the day. And I agree. Yeah, I noticed the same here. Rachel's audio a little bit off here all of a sudden. So just a heads up. I think we can hear that. We'll do maybe just a smidgen of maintenance there real quick, Rachel. We'll see if we can get that to correct itself. Let's take a look. I wanted to also peek in on energy because inevitably I've heard from many traders noting that energy is the one that's pulling back today. And you can't say you're terribly surprised. If you're a technical trader, you're looking at the pattern here. You're saying, well, we probably thought we could get to the 200-day, but we also thought leading into that concept that the 200-day could be a spot for a bit of a pause. Rachel, I imagine that's something you've been monitoring here as well.
Definitely. And thank you for the tip on the audio. I just switched my audio over, so let me know if there's any other issues. But
loud and clear.
Awesome. So it looks like that 200-day moving average is definitely that form of resistance that we've seen, but it was one of the leaders in the last week as far as a sector basis, and especially on that day that we had quite a bit of a sell-off on Friday. It was one of those sectors that led, but still yet it is below its 200-day, touching that back-to-back days. So that 200-day is still going to act as resistance, and we're kind of under this overhead supply for right now in energy.
Yeah, we are. I mean, at this point, there's not a lot of action to take. If the selling stops at the gap zone here, there's, bulls remain in charge, right? I mean, that's a pretty common thought. You've got a gap, you're sandwiched between the 200-day and the gap. But if it holds this level, or even if it filled the gap from Thursday into Friday and held that level, many traders would tell you that remains bullish in nature. But you have to, if you're going to watch energy, you got to keep a close eye on oil here. There was obviously a big spike to the upside on Friday on concerns, and then those concerns to an extent appear to have been a little bit alleviated, Rachel, although we are trading fully within the candle of Friday. So to this point, we have, again, no decision just yet.
Exactly. I mean, in oil, I'm glad you pulled up the chart, because oil is going to be the thing to watch when it comes to the energy sector. We saw that breakout, and honestly, a target price hit right on the nail with that inverse head and shoulders that occurred right above that 64 neckline level. And crude oil is above its 200-day with that volume increase that we just talked about a minute ago. So this could be something that sticks. I mean, historically, when we've had geopolitical tensions like this, oil kind of spikes and then dies back down a little bit, or kind of becomes a little bit more muted. But traders will just keep their eyes on that 200-day simple moving average there in the short term.
Yeah, I think you're right, given the significance of the 200-day. The times we've had in the recent year been above it have been relatively short, but our trends have carried every step of the way. And what I mean by that is that we've been basically in a downtrend since that peak in September of 23, everybody. And if I drew that downtrend line, this is what stood out to me, is that we only had that one instance back here where we were above that downtrend line. And again, that was all of about a week to 2 weeks. And then we were quickly back below it. Well, we're in the midst of being above it once more, Rachel, and I think it reiterates the importance of that 200-day, of that downtrend line. If all of that is maintained, if we basically hold on to about the 68 and a half zone here, Rachel, I think many traders are going to suggest that you're looking at a new uptrend in oil. And so that means that, of course, that is inflationary in nature. That could be problematic for the broader U.S. economy. If we bring oil back down under that significant level, though, you could possibly look at that as deflationary in importance going forward as well. I think this absolutely is something that we traders need to at least be thoughtful about in the coming weeks here.
Definitely. I would echo that point for you there, Kevin. And this is why we just love going through all of these different types of charts, because that's the beauty of intermarket analysis. You're kind of piecing together some of these clues of the entire puzzle. You can't look at energy without looking at oil. You can't look at inflation without looking at commodities. So it's interesting to compare oil to what else is happening in the rest of the commodity space as well. And one of the ones I've been watching is gold. So I don't know if we want to pull up that chart real quick.
Oh,
but
sure.
So
well, actually, this is interesting here right now. I mean, looks like we're trying a breakout and it's not playing out that way. So tell us what you're seeing.
So it looks like an inverse head and shoulders to me. I guess not like quite an inverse head and shoulders, but those inverse those bottoming patterns that we see. But it's been something that's consistently made higher highs, higher lows. It's still extended from all of its moving averages. But the interesting thing to me when I was looking at a chart at this over the weekend, because I tend to change the styles between a line chart to see the closes for all the Dow and toggle between that and a candlestick chart. And so if you change that style to a line chart, you'll actually see on Friday amidst some of the pullback or kind of things that we were seeing in the market, you actually saw a new high made on a closing basis in gold. So closing prices, most important, I don't know. That's the thing that sticks out to me.
That seems notable. First of all, I like the call out of being willing to change your style of chart as necessary. Don't forget, everybody, one other way to think about it is to create a grid with a line chart on it and save it as a separate grid that you can access very quickly. You can have it on another monitor. You can have it hidden behind your detail. That's one other option that some might incorporate. So I love that. And I also think that what you're seeing there is very much in line with your comment there about running into resistance here at this level, of course. Now, the question is are we in the midst of failing, or are we just getting a little bit of pressure? It's still too early in the day to know. But the uptrend here is really the 50-day. Look, we've been below the 20-day a number of instances in this rally, everybody. The 20 does not appear to be the moving average of import as it relates to the futures here. Maybe keeping an eye on the 50-day might be more notable. Now, a rejection at this level and then a test of the 50-day would sure be interesting. But I have to point out, as we've been talking RSI all morning, Rachel, this is not a great level of the RSI after having pushed in to try and break out, meaning some traders would look at this move in the RSI and today's try to break out and say, yeah, that's not happening because the RSI is not high enough. We have not had enough relative strength in the last 2-3 weeks on this push into this level to generally give traders a belief that a breakout could occur. And here we are being rejected at this level. Doesn't mean the trend is over. Doesn't mean we have to necessarily test even the 20, much less the 50. But it's certainly notable that we're not getting that relative strength in this recent trend of late. Nothing like what we saw back here when we pushed into those new highs originally. So that's a Great stuff on gold there, Rachel. I appreciate the look. We only have about 6 minutes to go, everybody. So I thought we would do a little rapid fire on some stocks in the news on upgrades and downgrades. So I wanted to hit a few of these for you all today. So let's hit up a couple of upgrades. First of all, I've got Cisco upgraded at Deutsche Bank to buy from hold. New target here at $73, up from $65. The firm sees improved visibility towards durable mid-single-digit growth in the upcoming years for Cisco, with tailwinds from AI specifically. So when you look at what's going on here, Rachel, this is an uptrend that's working out and looks like a recent test of the 20-day moving average.
Yep, exactly. It's funny we bring this up because I actually charted this one on Morning Movers this morning.
Of course.
That you did exact same call out. So those all-time highs near 66 to 67 as resistance. And then obviously that range that we've been in the last 20 days or so with support down at 62, further support. But in the near term, just that bounce or retest of that 20-day simple moving average, the fact that we're holding that and are seeing strong momentum as well, that could signal another move higher, especially with the gap up today.
Yeah, notable. Interesting on an upgrade. Another one getting an upgrade is Celsius. Now, Celsius is one of those that's made basically this entire return move to low levels, but has come off of the mat of late. You see that it's above its three major moving averages. TD Cowen upgrading Celsius to buy from hold. New target here at 55, up from 37. So that seems notable, of course. Again, hey, appreciate the upgrade, but for the record, the stock is up 100% off of that low since February. So, you're a little behind schedule here, TD, but that's okay. Nonetheless, a nice move. We could see some support perhaps over the last couple of weeks in the neighborhood of that 20-day moving average as horizontal support zone, potentially. So I wanted to bring that one up. Now, there was also one that many of you have been following of late that got downgraded. So let's bring up CoreWeave here, CRWV, in our last couple of moments. I've got some pattern details on that one, Fibonacci move. Let's hide that Fibonacci, though. And I'm going to let you talk about it, Rachel, but let me just point out that Bank of America downgrading CoreWeave to neutral had been at buy. New target on this is big adjustment, by the way. Their prior target was 76. They kicked it up to 185. Noting that the stock has run up 145% following their Q1 results. The firm believes much of the near-term upside is priced in, but the firm raised its price target as it acknowledges there are positive developments, including a new hyperscaler customer, an expansion of the company's OpenAI agreement, and a debt raise at a lower cost of capital. All of that sounds favorable, Rachel. What says the chart?
The chart agrees with it as far as it's done nothing but make new highs since we had that base breakout in April and May, and then it formed almost like a pennant type pattern. But this one, if you really want to get down to the nitty gritty of the price action, you can even kick it down to a 20-day hourly chart, and you can see that short-term range that it's trading in. Sometimes price just needs, with a run like this that we've seen, it's almost been parabolic with CoreWeave, and sometimes price needs to just digest the gains a little bit and kind of correct through time. So that could be what we're seeing as this wedge or range type pattern kind of takes place. But there has been no break in the trend. So the trend is still up in the long term in this case.
You are absolutely right about that. The fact is that you've got a little bit of a consolidation going in here between my white lines. Those are the same white lines we saw on the daily chart, everybody. The moving averages in here are also kind of notable. I'll mention these are all simple moving averages, but I've made some adjustments. So these are a 325 period SMA, a 137 period SMA, and a 52 period SMA. Ultimately, these are designed to give you different windows of time. Remember, there are about 32 and a half hours a week in a trading week, that is, right? 6.5 hours a day times 5 gives us 32 and a half. And that means that the 325 is akin to the 10-day moving average. That's our longest moving average on this chart. So just another example. Now, I spoke about this in one of the recent classes. I believe it was advanced charting, just conceiving of different ways to find your trend levels from your daily chart to your intra-period chart and doing a little bit of math to convert all that. That's ultimately what I've done with these simple moving averages. Some traders might want to use exponential moving averages like these on the intra-period timeframes. But I think it was a good discussion nonetheless, Rachel, on a stock that was down this morning, is bouncing off that downgrade announcement. So opens weak, and you bring buyers in. Pretty interesting potential move here if the stock does in fact carry the trend that has been working with it along the way here. So wanted to make sure we covered as many individual equities for you all today as possible. I've been hearing a lot from many of you in our survey opportunities wanting to see more individual stocks. And so wanted to make sure we did that for you all today. Rachel, this has been a fun discussion as always. Love having you back. Thank you so much for being here, sharing your thoughts and ideas with our viewers today.
Yeah, thank you for having me, and welcome back to you as well. And I enjoy this with each of you, and just thanks for having me on today.
Always our pleasure, Rachel. And to everyone being here, thank you. Remember, you can follow me and Mike on X, Mike Fairborn CS, Kevin Horner CS, and then eventually we're going to get Rachel into X as well, whether she likes it or not, everybody. So thanks for being here, everyone. Have a fantastic Monday. We look forward to catching up with you all again real soon.